of market and a massive sell-off that Indian markets saw yesterday. There is some sort of comeback that Indian markets are staging at the moment. My colleague Suyash Maheshwari here with us to run us through the market's mood check. What's exactly happening, Suyash?
Shweta, there's an old market adage that says, prices move and reasons follow. Every time there's a sudden or collapse in the market, a one-way move, all of us are suddenly scrambling for reasons. But if we are to put a blame on someone, I think it's clearly the culprit of this fall is clearly the broader markets. They are significantly off their peaks. They have fallen by about 7 to 12% in the correction phase that we have seen in the last couple of weeks. But remember, the broader markets, they were on this fairy tale sort of a run. From March 1 of 2023 to March 1 of 2024, the small cap index has rallied by about 75%. The mid cap index has rallied by about 60%. So the move overall has been so unilateral. I mean, everything is moving up, right? So a correction was something that the market was hoping for, was calling for, because the valuations, there is a clear discomfort as far as the broader markets are concerned. And this is the first proper correction that we are seeing playing out in the markets in this last 1 year. Along the way, there were certain price corrections. If you look back 5 or 6 months ago, since September, there was this one-day correction that would play out in mid caps and the small caps of 3 to 4%. I think all months from September to March, February, apart from November, every month we would see this 3 to 4% crash, but the market would recover almost immediately and get back to the lifetime highs. But this time the situation seems rather different because the correction is also sticky. It's been going on for the past couple of weeks. Yesterday, of course, there was this big crash where both indices saw its worst percentage fall in the past couple of years, and the froth is actually getting cleared out, but the writing was clearly on the wall. I mean, we are seeing some bit of a pullback this morning. It could be a technical one because remember, after this sharp correction, both indices, the mid cap and the small cap indices, at least on technical charts, they were in the oversold zone as indicated by this indicator called RSI, which is relative strength index. So basically over there, a reading below 20 suggests that the markets are oversold and there could be a reversal in the offing, and that's what has happened this morning. So nothing surprising. Both indices were in that 20-30 odd zone. But again, it could be a dead cat one. I mean, this rally perhaps is not going to last because it has been a sticky correction, and there are multiple factors at play as well, because remember, tomorrow we'll have the report from the mutual fund houses that are focused on the mid caps and the small caps about this MF stress test result, which will basically show you how liquid these portfolios are, and if you are going to go out and sell all your stocks in different cycles, let's say in a time period of COVID or when the markets were rising, how correction proof your portfolio really is, and when you are going to sell, because the small cap space particularly, most of these stocks, they are illiquid, meaning the spreads, the buy and the sell spreads, they are extremely large. So if you go out, let's say selling at a certain price, at a time when you are actually able to sell off all your positions, the price would have moved significantly. So how much the prices are going to correct, how correction proof your portfolio is, that is what this MF stress report is going to put out there. Then of course, it's March, it's a tax harvesting season, advanced tax deadline is tomorrow. So of course we are seeing some reallocation of money that's also going on over there, and then we also have electoral bond details. It will be a big issue for the foreign institutional investors, because of course remember, corporate governance is is on the top of their checklist when they go out looking at companies. But even when everything is falling, because small caps, almost everything is falling. Yesterday, of the 100 stocks in the universe, 99 were down in the mid cap space. Only there was one particular stock that rose, CG Power, and there was a fundamental trigger for it, even in the small cap space. Similar trend we are seeing.
Suyash, I just want to come in. I think, excellent analysis that you've given us, but have any of the analysts that you have spoken to, any of the market watchers you've been able to speak to, and you speak to them every day, every evening, is it one particular trigger which points on the correction that happened yesterday? Why yesterday? Why not again today? So, I mean, we've seen the commentary coming from the regulator. Right. We've seen the statements of froth in the small and mid-cap segment. We are seeing commentary about the stress test, which is likely to yield some results tomorrow. But at the same time, there are also positive triggers in the market with US inflation and even Indian inflation coming pretty much in line with expectations. So, why was that single day massive correction yesterday, and why has that not continued today?
Okay, let's go back to February 28th
Yeah.
because that was the first time when SEBI came out and rang that alarm bell that there is excess fraud building up in the system.
Yeah.
Maybe clear that. I mean, if we are to talk about why is the regulator stepping up, I think it clearly is a case of a stitch now saves you from 9 stitches later on, right? Something along those lines.
A stitch in time saves time.
Saves 9. So basically, I think the market, or at least the concerns that are being flagged by the regulator, it's well intended. They are, looking at these intermittent corrections. So there is not a collapse, big collapse later on, because the money that has been driving the markets in the last 3-4 years has been retail participation. We have spoken on this show as well. The retail participants, and their number has gone up, threefold. They have from about 2.5 crore to 9 crore in just a matter of 3 years. So there is significant flow of money that is coming from the retail participants. And talking about why we finally saw this, chip falling yesterday, I think because it was not just once that SEBI came out with a report, or Madhvi Puri-Buch or Amphi, flagged this. The concerns they have been talking about all through the past couple of weeks. Yesterday, even Madhvi Puri-Buch had said, there is concerns of market manipulation in the SME segment. And look at what's happening over there.
Yeah.
I mean, some of these stocks, they have fallen 20 to 30% in the past couple of weeks alone. So clearly, the voices are getting louder, and I think, the overall sentiment has also shifted. Even if you look at Nifty, because the valuation discomfort isn't as large over there as it's in the broader markets, right? They were relatively well insulated up till that noon mark yesterday.
Yeah.
But again, I think they fell victim to the collateral damage. All of these corrected. Reliance, there was no reason for Reliance to fall 4%. There was no reason for Adani to fall 8%.
Right.
But all these stocks corrected, right? So I think it's a domino effect that we are seeing playing out in the market. And I think that was, we needed that one big major day of correction for the markets to really,
And that happened to be yesterday.
take stock of the position where we are currently at.
Right. So, an interesting
Nothing
statement coming in even from the BSE MD CEO Ashish Chauhan a couple of minutes ago, saying that this market is not for the faint-hearted, and he's saying that if risk is not something that you're willing to take with your hard-earned money which is going into the market, this is not perhaps the time for you to be playing in stocks. So
All right,
that's where
lot
we are.
happening there as far as Indian markets is concerned. Suyash, thank you very much for joining.